So we're going to talk a little bit about one of my favorite topics tonight, velocity banking. Right? Does anybody know about velocity banking? Who's had a great experience with velocity banking? I love the tagline that teaches about what velocity banking does. It helps smart people pay less and earn more. Is that a true statement? It's absolutely fantastic. It's been true for me, and I loved what I learned. But let me tell you a little bit about why I'm up here, and Bob told you a lot of my story. I'm a real estate investor at heart. I love real estate. It's been the family business. My dad's a broker. My brother's a broker. My sister's an agent. My other brother's an agent. It's kind of in our blood, right? We've done it since I graduated high school. And it's been one of the best things for our family because it truly propelled us to a lifestyle of financial freedom and wealth that let us design how we wanted to live, where we wanted to invest, the vacations we wanted to take, and the fun things that we could do to really be financially free. Who's here tonight to find a little bit more cash in their pocket at the end of the day? Yes, good job. How about some of you, maybe, do you ever feel like the month just keeps going and going and you're kind of worried if you're going to have enough money to get you to the end of the month and then the money runs out before the end of the month comes? Yeah, it happens. It's part of life. It's part of what we do. And we can find better ways to do it. And so that's what we're here to talk about tonight. And one thing in particular we're going to discuss is banking tools. And everybody's like, oh, banking tools. They're almost as boring as tax. Just almost. Okay? So, but first, the attorneys tell me that I've got to tell you who I am and what I do. So let me give you a little disclaimer. Renatus is an amazing company that allows us to not only have this fantastic education, but to share it with others and earn earnings as we do so. So I am tonight an independent marketing affiliate for Renatus. That means if somebody in the room buys a product, I might get paid. There's some other things that happen. We do amazing work to share this message of inspiration and financial freedom. And we do our best to communicate the topics and what we have to share. But we also want to protect what is the intellectual property of Renatus. So for those of you who might be live streaming tonight, we ask that you don't. You're welcome to take a few pictures. We want you to take pictures of the slides and the information we're going to send home with you tonight. And they're for you and your personal review, and to show your family and talk about ideas and share the concepts. But we don't want you to post them on social media. We need you to share the message and let people learn for themselves. Now, one more thing I have to tell you. As dapper as I look tonight in my blue pinstripe, I am not an attorney, nor do I want to be one. No, I love attorneys. We have amazing attorneys and they do good work. But I'm not going to give you tax or legal advice tonight. I'm just going to out and go and share a little bit about what my experiences in life has been with financial tools and banking products. Is that okay for everybody? Okay, good deal. Well, let's get started. I want to share with you one of the reasons why I came to the company, as Bob mentioned earlier. The mission statement of Renatus states, our mission is to empower 1 million motivated individuals with principle-centered entrepreneurial knowledge so that they may attain financial independence as business owners and real estate investors. So what does that mean? We want to find 1 million people who want to be financially free, who want to choose whether work looks like real estate investing or like sending your kid a W-2 or a 1099 on Christmas, right? And that's what we can do when we successfully apply the tools and techniques that the investor and real estate practitioner instructors at Renatus share with the Renatus community. I'd like to share the story of Troy and Debbie Rice, what they found out about velocity banking when they began to apply the strategy. Troy said, the velocity banking strategy allowed us to pay off my student loan and a truck in just 17 months. It reduced our overall debt payments from $5,200 a month to $3,100 a month. Any way you slice it, that's a $2,100 a month pay increase. All I can say is thank you to Renatus. What you teach changed our lives. And that's simply our mission. We really don't change anyone's life. We simply provide information to you so that you can change your own. And then that ripple effect will take it out. and hopefully change the lives of your children and family members, siblings, parents, grandparents. Anybody a little bit concerned on how long we're living in retirement? 20 years doesn't cut it anymore. It might be 30 or 40. And frankly, I want to live for about 50 or 60 in retirement. So we need more, and we have to do better. And that's a good thing, because we're going to help you understand some tools that you can use tonight. Everybody okay with that? We're so glad you're here tonight. I have a goal for you. The goal is very simple. I am going to turn everyone into the audience who's game and willing to play. Who's willing to play? Who's in? Raise your hand, stick them high in the air. We are going to turn into ninjas. We are going to be debt ninjas. And that's what I'm going to send you away with tonight. Some things that you can do today that will turn you into debt ninjas. So I need your help. We need a little bit of practice. On 3, I want you to show me your best debt ninja. And I will know, because I can see you. Ready? 1, 2, 3. Hi-ya! Key goals for Velocity Banking are the following. We want you to pay down debt. We want you to create and control cash flow. Bob mentioned this several times. So did Mark. Cash flow is power, and we're going to talk about this in depth tonight. We want you to create financial security. We want you to use credit responsibly. We're going to teach you how to pay less in interest. Some of you might choose to fund your Renatus education. Others might choose to invest in real estate. Some will do both. And we want to help you create a Velocity Banking plan that will help you start on this path. So let's talk about it. What is Velocity Banking? Velocity Banking is the use of readily available banking tools to manage and increase cash flow, quickly create financial security, and dramatically reduce and minimize the amount of interest we're going to pay over our lifetimes. Everybody good with that? Okay, give me a ninja. Hi-yo! Better, better. You gotta keep working on it. This is a practice thing. Okay, what do we really want? Cash flow. Let's hear it again. What do we want? Cash flow. What do we want? Cash flow. We need to create cash flow. That's what we want to work with. And so we're going to talk about specific strategies tonight that will help us do it. Let me illustrate just quickly the point of cash flow and how powerful it is. Henry Ford once stated, "It is well enough that people of the nation do not understand our banking and monetary system. For if they did, I believe there would be a revolution before tomorrow morning." Why do you think he said that? Because we don't understand. A lot of people think or believed or don't think they need to understand how banking and finance works. And then what happens is the people who do understand that game, what do? They make money. They earn interest. Are you here about making money? Who's here about making money? Yes, right? So if you want to make money, do you think we should start to study banking and finance a little bit? Let's do it. Let me give you some banking basics. Banks are businesses, not charities. I'll say that again. Banks are in it to do what? Make money. So they're going to do everything they can do to make money. And I'm frankly grateful. Are banks evil? No. I want banks. Do I borrow money from banks? Yes, on a regular basis, because then I take that and I buy a building, and then I start to pay that loan down, and then I go and they give me more money, and I say, "Mr. Banker, I got another building I want to buy." And he'll be like, "Oh, great, you got some down payment?" I said, "Yeah, let's go do it again." And then pretty soon I got 4 and 5 and 10. Does the banker like me? Oh yeah, we're tight. I buy him a new set of golf clubs every year. Well, I don't, but my buildings do, right? So we need to remember that they are going to advise us and sell us on products that make them the most money. So we're going to learn tonight about those products and how they work and how to use them in our benefit. One of the biggest strategies that banks use is a strategy called the segregation of income. And what they want to do is they want to take our income that we get and they want to put it in lots of little different places, right? Because that separation of income means that we reduce our risk. That's actually, some people will say, a good thing, right? If you've got little bits of money in a whole bunch of different accounts, if one of those accounts closes or a bank has trouble and it's above the FDIC insurance and all that other stuff, you know, there's some protection there. You're diversified is what they say. But that diversification can cost us dramatically in interest. So let's look at a little bit about what that looks like. Now, what accounts does this apply to? Any type of account. Checking, certificates of deposits, money market CDs. All of these are banking accounts or accounts that banks use to separate our income. So what do we do with our money? We put it into our checking account, right? And then we go and we put some in our money market account. And then we drop a little bit into our savings. And then we pay our bills, right? And if you've opened a new account recently, what do the banks ask you to do? You come and say, I want to get a checking account. And they say, I'm so excited, we'll take your money. But, if you have a checking account, you should also consider our Visa account. Would you like a Visa card for overdraft and a little bit of protection? What do we say? Sure, why not, right? And then they say, well, if you've got that account, we really should set you up a money market account so you can start saving. We're like, okay. But if you want to do really well, our certificates of deposit are a little bit better. So let's take $25 or $50 a month into a CD, right? All of a sudden, one account turned into 6. And we've diversified, and the bank has the optimum way to collect our interest, right? So we're going to change that. Let's compare a little bit visually what the difference between velocity banking versus segregation of income that banks use. So if we start, let's look at our debt load. This is the big rock right in the middle. You see that? Big rock, that's all the debt. That's student loans, house payments, everything, cars, all you got it. We want to get rid of it, and we want to do it quickly. So this is what the banks tell us to do. Put a little bit of money in all these accounts, and we'll chip away at that debt over time, right? Here's what velocity banking does, okay? We're going to take that velocity banking account and knock it away big chunks at a time. Who's with me? Good? Big chunks. We're going to take it, we're going to take that and just knock it out of there. It's going to be great. So let's talk about how we do it. Banks, I have to give you a warning, will only speak to us or sell us on accounts that we understand and know. We know that they'll talk to us at a level commensurate to our understanding and knowledge. So we have to go out and help the banks get us the products. I remember when I was using a first position HELOC to refinance my home. I bought my home with a HELOC. And I went into the bank and I talked to the teller, because nowadays you don't get to talk to people, you have to go to the tellers first, and they'll say, hey, I'm interested in getting a line of credit or a purchase line of credit. And the teller says, we don't do that. And I said, yeah, you do. And she's like, well, maybe I just don't know. Let me find somebody else. And so they move me over to the lead teller, and the lead teller says, how can I help you today? They say, I need a purchase line of credit. And they're like, fantastic, here's our loan application. And I said, no, I don't need a loan. I want a line of credit. And they said, we don't do that. We can't do that. And I said, yeah, you do. So then I went to the assistant bank manager. And he comes over and he says, tell me what you're interested in. I understand you need a loan today. And I'm like, I don't want a loan. I want a line of credit. And he's like, we don't do that. And I said, yes, you do. This is a true story. Finally, I go up to the bank manager and I'm like, hey, I'm really interested in a line of credit in a first position purchase on my home. And he's like, I'm so excited. Did you hear our ads on the radio? I said, I did. And that's why I'm here. Thank you. And it's nobody's fault. They've got a young college kid or somebody working who's just getting started, and they've trained them to sell us on the products that they know and that are easy. It was my job to ask through the system until I found the one who knew the product for me. Does that make sense? The responsibility is on us. That's why we're going to become ninjas, right? We've got to take these mad ninja skills to the banks and say, hey, help me make interest work for both of us. And that's really what it can do. So let's look at how velocity banking works. First, we're going to identify and access cash flow. Everybody good with that? We know the power of cash flow because when we put all of our cash flow together, it starts to look like that great big jackhammer, right? We want to find, identify, and use a velocity banking tool. Next, we're going to transfer debt from our velocity banking account to loans and retire them. We want to eliminate payments and retire debt quickly. We're going to use this increased cash flow to exponentially leverage the speed at which we do it so that we can generate even more cash flow. And then, once we're in a position we feel ready, we can even acquire new assets, okay? So let me put this another way. As banking ninjas, what are we going to do? Wah! Give me the wah! 1, 2, 3. Wah! We are going to use credit lines to pay off loans. The little ninja up here is my 6-year-old son, CJ. Isn't he awesome? He's actually in the audience tonight. Give him a round of applause. Say rock star. He and I today are starting, or before, at this age of 6, we're starting to talk, like Mark does with his kids, about the power of financial tools so that they can go forward and have the ability to not be tied to debt for lifetimes. And nowadays, it can even carry forward for generations. So it's important that we do this. It's important that we teach and understand. So as we go through the Velocity Banking course, which is a full-day course in the Renatus education system, we go into a lot of these concepts in a little bit more detail and spend a little bit more time on them. But let's give another illustration of how they work. The comparison of lines of credit versus loans, okay? On the left side, we've got lines which are revolving. That means money can go in and I can pay down that line and then I can take it back out, right? They typically only have an interest-only monthly payment associated with them. Depending on the account, there are literally hundreds of banking loan products out across the United States that are used by banking institutions, unique and individually, who design and create their own products. So we need to find ones that work for us. And then we use that Velocity Banking account to pay bills, just like our checking account. It's very powerful. Now, when we compare that to a loan, what happens with a loan? If I make an additional principal payment against that loan, I've increased my equity, right? But do I have access to it? No. If I get in a car wreck and can't work for a month and I go up and knock on the door of the bank and say, hey, I need a little bit of equity out. I didn't get my paycheck. I haven't been able to work. I'm going to pay these bills. It's great. I've got $100,000 equity in my property. What is the bank going to tell me? You can't do it. I'm not working. I'm not getting income. They're not going to finance me, right? I'm in a strapped position. Now, if we did that the other way and I had a line of credit that had $100,000 of available equity in it, right? And I have the same car wreck and I'm struggling and I can't make my bills, what do? I pull out and I swipe my card, or I write the check tied to the account. Who did I have to ask? Nobody. Is that a little bit better security? Yeah. To guarantee and control our access to our funds, our money, our cash, is one of the fundamental principles of Velocity Banking and becoming a banking ninja. We talk a lot about that, but let's look in detail about what these loans do. With fixed loans, you fix the amount you're going to pay, you put it in, you can't get it back out, and it's scheduled and fixed. The bank has created a product that ensures them that you will make payments for the longest period of time. How long? 30 years, sometimes 40, sometimes 50. They want you tied into there because it's a great product for them. The longer it is, the lower risk, right? They have assets to protect, markets compensate. Let's look a little bit closer. In a 30-year amortization, this is what happens. It takes about 240 months to get to a point where the amount of money you're paying in interest is equivalent to the amount of money you're paying in principal with every payment. How long is 240 months? 20 years. That's forever, right? So what they do is they've got a product that front loads the interest and back loads the principal. This is a great product because it helps people get into homes and have home ownership. I'm a huge supporter of home ownership. But let's look at what it does. When we as Americans tend to move, how often? Every 5 to 7 years. And what do? We start over because we get a new house and get a new loan, or we refinance to pay for kids' school or to go on vacation. And so what all of a sudden is happening is we're living on this far side in the first 5 years where we live in the interest zone. This is the red zone. This is the bad news because the banks are taking our money. But what happens 4 or 5 years in when I get a little bit of equity in my house? I start getting letters from the bank. What did they tell me? Refi. Get your equity out. Go on vacation. Build an extension on the home. Buy a boat, right? We have to be better. We have to know and control and know how that use of that money impacts our financial situation. You can do it. And it's simpler than you think. Banking ninjas use a line of credit account as their general operating account. Again, all of your money coming into one central place, and that money together is debt reducing power. This is how we do it. It's absolutely fantastic. So we want to give you an example of the power of using a line of credit account in conjunction with a 30-year mortgage to reduce debt quickly. This is an example. It's hypothetical only. We're just giving an illustrative example so you can learn. But the purpose is, if this was an average American household, about $200,000 worth, they just got the loan this year, so they've got 29 and a half years of payments left. They've got about a $1,200 a month payment. It's about $600 about 5.5%, 6% interest. This is what their amortization table looks like. And do you see how it takes the whole 30 years to get through it? When we apply velocity banking and reduce debt, putting our money together to chunk down and create equity faster, we can reduce our payoff term to 11 and a half years. That 11 and a half years, being able to pay it off or saving 20 plus years of payments, is everybody okay with that? 20 plus years of payments is equal to about $163,000 in interest savings. Everybody okay with that? Right? Everybody go, ah! Right? This is it. We just got it. I just saved you $163,000. This is good stuff. Now, I know this is a lot to take in, and that's just an illustration, but don't get mad at me, because some of you are going, dude, you mean I could have paid off my 30-year mortgage in about 12 years? Yes. It's not my fault. It's just math, right? This isn't magic. We're not hiding anything from you. These tools that the bankers are using and that we employ in Velocity Banking have been around for ages. You currently have them now. Many of you have an account that you could use as your Velocity Banking account today. You don't have to go to the bank and even open an account. You can do it now. It's pretty amazing. But some of you are saying, nah, you can't do that. I can accomplish the same thing if I just make an extra payment every year or move to bi-monthly payments. Well, let's do a quick comparison. Bi-monthly payments do have the ability to save you a lot in interest. But on the same hypothetical loan of $200,000, $1,200 a month payment, let's look at the difference between the two. On a bi-monthly payment, we would typically eliminate about 60 months off the life of our mortgage, maybe a little bit more, right? 72 months maybe. And if we take that 72 months off the life of that mortgage, it creates some substantial savings. We pay off that mortgage in 288 payments instead of the 360, right? Well, let's look at what that savings difference is. It's a difference of $58,000. Is that not great? That is good stuff. But let's compare it to the ability to use a Velocity Banking account in conjunction, where you're using all of your funds in the same place to reduce debt, making large chunks of debt reduction payments, hopefully against your mortgage or against any debt that you have. Let's see what it does. Let's make that comparison. We can pay it off the same debt in 138 months. That's the difference. It's $100,000. It's pretty powerful stuff. Now, these figures won't work exactly for you. They're illustrative. They're for teaching purposes, right? But there are tools out there you can use to do these calculations. We share them. We show that you can analyze your own financial situation and learn how to truly have an impact at paying less in interest over your lifetime. And that's our goal with Velocity Banking. We encourage you to do it. How do we do it? This is serious business. We're dealing with people's finances. So we ask you and teach you how during our classes to create a Velocity Banking plan. This plan includes doing an assessment of your current situation and finding what's right for you. We first off want to identify your top drains on cash flow, right? We want to recoup them. Next, we want to identify an emergency reserve amount so that in case of emergency and you can't work, or you need to subsist for a long period of time, what is the right amount for you and where do you store it? Is it 6 months? Is it 9 months of income? 12 months of income? And we compare that to your obligations that you have so that you've got enough. Then we look at the appropriate Velocity Banking tool and start to implement and look at how using that Velocity Banking account could reduce the interest that we pay. We open and we start to use it, and we continue to monitor it. And if we're successful and we reduce those payments, what do? We do it again. We do it again and again. So our goal is to create opportunities for people to be debt-free and then acquire assets to create cash flow so that they can have financial freedom. This is responsible utilization of banking tools, credit, and our income. It's pretty powerful when we do it right. But again, it's up to us. It sits on our shoulders. I love what Dave Ramsey says, and this is one of the big issues, the very first one, and I know for a lot of people it's a dirty word. That budget word, that B word, we hate to do it. We talk about the importance of looking at your finances every single month. That's where it begins. Dave Ramsey says about budget, a budget is telling your money where to go instead of you wondering where it went. Sometimes this isn't an easy exercise, but it's one of the most valuable. When I started doing velocity banking just a few years ago, when I really began to understand it, I assessed my situation, applied my velocity banking strategy, and my first month freed up over $450 in cash flow. Anybody open to an extra $450 a month? Absolutely. Give me a wow! Right? It's good stuff. You have that same power. In our classes, we provide a sample budget, which is based on cash numbers. We identify top drains on cash that you could maybe opt out of, find better ways. And another thing, I apply what I learn and I apply what I teach. When we were assessing our monthly subscriptions just a few months ago, I found $72 in subscription fees on services that I hadn't used for more than a year. But they were auto-recurring, right? I had done the set it and forget it. I didn't even use the service anymore. These could be Netflix, streaming services, online subscription fees to magazines, online articles. We are so readily giving our information away and putting it into systems that automate and do the process for us, we often forget to look and monitor. So it comes back to us. So how do you get started? How do you really get into velocity banking and apply it? Well, velocity banking is just one of the 10 courses in the Renatus Essentials education package. It's extremely valuable and fantastic information. But it's a full 8-hour course. We go into detail, we do exercises, we really study. Because the power that you have inside of you to create and design a lifestyle of financial freedom, a future free of the bonds of debt, where college isn't something that your kids are afraid of and stressing over and wondering how to pay for, but where they get to choose on how they can pay for it themselves. Where we aren't leveraging our retirements to get our kids through college or pay for medical bills, where we have the cash flow needed to live the life that we love. That's what this is about, and that's what velocity banking does. So, in the words of one of the master ninjas, Master Oogway from Kung Fu Panda, I leave you with this. Yesterday is history, tomorrow is a mystery, but today is a gift. I truly live every day as if it is a gift, because it is. I have an amazing wife and son. I have an amazing family. I work with an amazing community of people, and I am in control of my life and financial freedom. I am a ninja. What? Right? And you can be too. But this gift, that's why they call it the present. Be present. Choose in. Choose control and choose a life of financial freedom.